Namaste and welcome to the Bharatvaarta podcast. I'm Roshan Karyappa. The episode today will focus on one of the most hotly debated topics in the world today, cryptocurrency. Now, we won't go into the 101 of what crypto is and certainly won't offer any financial advice on buying, selling, or indeed hodling Bitcoin or crypto. What we will instead focus on is crypto for India, what it will mean for us to adopt this technology, currency, or asset, and how we can do that, and the impact of all of this on our future. Joining me for what promises to be a fascinating conversation are two esteemed guests who have written and talked about crypto extensively. First up, we have Akshay BD, who helped launch Uber in India and led global public policy for Uber Elevate, a project to launch urban aviation. He's now an independent consultant and angel investor focused on Web 3.0 and crypto. Welcome, Akshay. Thank you so much for joining us.
Thank you for having me.
And we also have Rameesh Kailasam, who is the CEO of IndiaTech.org, a think tank and industry group set up to support internet startups. Ramesh has over 2 decades of experience working with industry and government. He's also a regular columnist in prominent Indian newspapers and appears on Indian television as well on policy discussions. Welcome, Ramesh. Thank you so much for joining us.
Thanks, Roshan, for having me here today.
Wonderful. All right, we have a lot to discuss today. So we'll begin, I guess, with some opening thoughts. Akshay, I'll come to you first, and maybe Ramesh, you can comment afterwards. So in my opening remarks, I refer to crypto as a technology, currency, and asset, right? Different people view it differently, and indeed, I think it can be all of it, right? So Akshay, how do you view it, and what is your vision for why India should adopt crypto?
Thanks for the question. I think the thing, Roshan, here is that the best analog I have found to understand crypto is with media, right? In tradition, when the internet launched, when social media and blogs, all these things launched, there were strict lines of differentiation between text-based blogs, video-based show. Like, a text-based blog is basically a newspaper, right? A video-based show is on television. So there were strict lines of differentiation between the medium and between text, audio, and video mediums. Now, when blogs started happening, those lines started blurring, right? You started having a blog where a video was embedded, a picture was embedded, and maybe it was also complemented with a podcast, right? And so you couldn't start having these hybrid forms of media, which the internet allowed in ways that the traditional pre-internet media did not allow. So similarly, I think there are these strict lines of differentiation in traditional finance, such as stocks, bonds, currencies, and commodities. And I think those lines of differentiation will eventually blur on the internet, because there may be a hybrid asset that is created, and that's just a crypto asset. Maybe it also pays you a dividend in addition to appreciation, like a stock, because it's a productive asset and it's a dividend paying yielding asset, right? And so I think the right way to think about it is it's just an asset, and you have to look at each asset for what it does. And that's why I think, in fact, Ramesh and his team, they have written a white paper that incredibly succinctly captures this idea that crypto should be treated as an asset class. And once that's done, you can think about what regulations follow depending on what type of asset class it is. And so I think we should look at what it does rather than what it is.
Okay, wonderful. So just a quick follow-up, before I go to Ramesh. So why should India adopt this asset?
Yeah. So I would make the case for that in a couple of parts. One is why India as the country should adopt it, and two, why Indians should adopt it, right? I think we have some structural advantages to adopt this in both of those categories. Why India should adopt it is because the world is effectively getting fractured into a like a Cold War Part 2 type thing, where there's US and China interests, and there and like we had the non-alignment movement previously, right? In the previous Cold War, I mean, one can debate how effective it was, etc. It was a purely ideological position. And we can debate on whether it was effective or not. But I think there is an analog to that non-alignment movement in this new world, where there are Chinese interests, US interests, and neutral international interests. Those are best represented by crypto networks such as Bitcoin, which is owned by nobody and controlled by nobody, therefore owned by everybody and controlled by everybody. I would encourage people to, if they're more interested in this geopolitical aspect of why this is important to India, read Balaji Srinivasan's essay, which is provocatively titled "Why India Should Buy Bitcoin." But he makes an incredible case for why the future of communication, especially in a world that's this fractured, might end up being, national protocols. So you have UPI for payment, you have Ku, which is an Indian Twitter, where you can, because it turns out if we just allow anybody to communicate anything, you can have you can have foreign interference in your election. You can stir up a civil unrest just by sitting somewhere in some other part of a comfortable part of the world, right? So it might end up being that there are national communication channels and neutral international communication channels, and those neutral international communication channels run on crypto. Um, on the second part, and I'll try and keep my comments brief because I know we'll go into this in much more detail later on, why Indians should adopt it. That is an easy case for me to make, because the internet allowed for us to transfer communication instantaneously between two parts of the world. Crypto simply allows us to transfer capital between two parts of the world instantaneously, right? And so then the question becomes, okay, is India a net capital attractor or a net capital, detractor, right? Will capital leave the country, or will it in aggregate, or will it arrive in the country? And I make the case that that answer is just, that answer to me is obvious, that India will be a net capital attractor, because there's 35 million engineers today. And each of them turns out can just you have a laptop and internet connection, a good idea, and start attracting capital from a global market from the first day of their operation. We've seen this not go beyond just be a hypothetical with protocols like Polygon, where there are three founders. They really built through the bear market to the crypto bear market, and today they're a $14-15 billion protocol. If they were a startup, they would be on the front page of every newspaper, every magazine, and every podcast, right? And so that is happening. And I'm incredibly excited about that, because it's going to give opportunities to people who don't maybe live in the metro cities, but have this have access to an internet connection and laptop. And crypto will end up being the skyhook, where they just they are they're elevated into the cloud. There are a lot of YouTube channels after Geo launched that are in run by small teams in a village, or like there's village cooking show or things like this. They were able to get famous, right, by making their own media, and I think now they will get wealthy by making by being able to participate in this crypto economy.
Wonderful. Thanks for that, Akshay. So Ramesh, all of this sounds amazing, right? I mean, you've just heard Akshay talk about the innovation, and to folks who are indeed in startups or those concerned with this kind of technological innovation, I mean, all of this sounds like music to their ears, right? But how do policymakers and those in government view this? Because, and also maybe you can clarify which specific bodies within the government structure would be concerned with something like crypto or Bitcoin.
Thanks, Roshan, for asking that question. A bit of stepping back, and I'll just come back to this question, adding on to what Akshay said. I think one of the fundamentals why India should be looking at disruptive technologies, obviously with necessary checks and balances, but can't be shying away from them, is the fact that if India aspires to become whatever a $5 trillion economy, or even, I mean, I would say, why not a $10 trillion economy? That exponential, that leapfrogging that India has to do can happen only when we embrace more and more disruptive technologies, because wealth creation is going to happen in disruptive technologies. We have seen that with the startups today. If you see, it is the largest job opportunity creator, or work opportunity creators, as I would say. Had we taken away those things away, I mean, you would have had large chunk of population still looking for livelihood. You would have not survived the lockdowns, because these are the startups which enabled whatever we are in the urban centers of India, where we are able to stay within the confines of our homes and still have access to goods which otherwise we would have stepped out and had, or services for that matter. So, I mean, we do have the conventional economy. We always talked of manufacturing, hardware, software, services, IT, back office. That led us to where we are this far. If we have to take the next exponential jump, obviously, being biased for the sector that I represent partly, which is the startup sector, this is the sector which would take it to the next level of the 5 trillion economy, which will be a combination of what you call disruptive technologies, plus kind of connecting the conventional economy with the consumer. And as India, we are a producing economy and a consuming economy. So we can't be taking away that. This is not a luxury which exists in all other geographies of the world, where you have startups being the producers and consumers also of these technologies and startups sitting in India. And progressively, the India learning, helping them go abroad, taking it to the world. So therefore, the big billion-dollar enterprises can come out of India. But regulation is something which is a brake there. How many brakes? I'm not for removing all the brakes, because a vehicle without brakes is a dangerous one. But at the same time, we do need brakes where necessary, but that doesn't mean that you fit the car only with brakes and no acceleration available. So my take is that therefore startups which are there in the internet economy form the next exponential jump, which was disruptive, is now getting adopted. Crypto and the blockchain world is the next disruptive thing that is going to happen. We can't afford to miss this bus, because this will not only open up multiple opportunities of livelihood, but also help India position itself as the next kind of global leader in technologies and experimenting in these technologies, and therefore offer it to the world. So where does the government think of all this? To your question, the answer is pretty clear. Every disruptive technology, and the answer is almost same in all parts of the world. I mean, regulators do come judging conventional economies and conventional industries. So when suddenly something disruptive happens, the first rush of blood that happens for a regulator is to say, oh, this has a potential to bypass a lot of things which I have put in place, and a lot of things that I have ring fenced and kept. So what do I do that? I mean, how do I handle this scenario is very simple. I retrofit these guys into the conventional laws that I've written. So therefore, the obvious choice for many people is to say, okay, I mean, you might be a cab hailing app. I mean, I'm going back to Akshay's example, but so what? I mean, it's still transport, it's still taxi. So you're governed by the rules which will apply to a taxi operator. I mean, that's the first immediate reaction that would happen, because that is convenient. And to the crypto world, it acts as the same. But unfortunately, that kind of thinking would have helped crypto had regulators taken that stand. But where it comes is, because it called itself a currency, people fell for less of crypto and more for currency. The currency word started dominating people's vocabulary and mindset, and people started looking at it and started saying, hey, if it is a currency, then I have a problem, because I own the currency. I issue the currency in my country. Who is this guy? I know if it is a dollar which is coming from US, I know if it is a pound coming from UK, or any of the currencies you pick up which has an identified sovereign nation backing it. But who backs this? Nobody. So which means that, does it mean that the people around the world will now have their own currencies and will be left high and dry? And will it lead to chaos? Will it lead to anarchy? Will it lead to possible misuse? And they are right in thinking on their own terms, being paranoid about it. But I guess the question therefore comes in is it a currency, or has it matured enough or qualified to be called a currency? And if there are use cases which are building up, no doubt. I mean, all of us can keep talking about multiple use cases, and I'm sure Akshay will give you more such examples. But the point is, for the regulator, since they are viewing it as a currency, and this industry initially positioned it and called it a currency, there is a perceived amount of mistrust that exists with the regulators, simply to say, okay, I can't allow another currency to operate. Which is why when we wrote the white paper, our thing was very simple. Tell the regulator, if I go to the regulator tomorrow and say, hey, this is a great currency, you need to adopt it because it has multiple uses. He said, sorry, I have my own currency. I might issue something similar if that is what fills your appetite for being digital, but I will not take this. So I think the alternative narrative which we pushed on, which was to say, okay, let's not give it or accord it the status of a currency for now. Maybe years later or decades later, when we all mature, and maybe we may be right, we may be wrong, to accord it currency status. But today, let's not give it the status of a currency. Let's call it an asset. And the moment you call it an asset, 99% of the issues that are underlying with regard to if I call it as a currency go away. And solutions which are there already in place have to be tweaked to make it happen. So I'm giving you this example because in the previous example, I was trying to contradict saying, okay, I'm a cab hailing app, why treat me as a taxi? But here is a case where we are saying, okay, there are existing rules, let's treat it that way, because this technology cannot be, should not be, and should not be looked at it from a negative perception. It has a lot of underlying benefits. But the point is, how much do you embrace now? How much do you embrace later? Has to be graduated. So therefore, to your answer, the regulator has to be educated. Articulation has to be packaged in a manner that regulators understand. We have to handhold them and lead them to this level. I'm sure none of us would be fully kind of becoming an expert in crypto overnight, but certainly we can make an effort to handhold them and lead them to the distance where we can give them that comfort factor and make it as an enabling regulation rather than a banning one.
Right. Yeah, that's interesting, because what you're saying is the possibilities are immense. But then, I mean, let's start with something that people understand right now, and they can, quote unquote, retrofit in their framework, or figure how they can, view it, and then let it logically evolve to whatever it becomes, right? So Akshay, you've just heard from Ramesh, in terms of a policy perspective and so on, right? So how would you convince some of the policymakers or people in the government? Because there is a perception that in some sense they are ceding their power to the people at large, or some unknown nodes and whatnot. And, that they're giving up all of their power to math and computer science, essentially, right? So which is probably a scary prospect for them. So, why should they adopt this proactively, and how would they benefit?
Yeah, I mean, in this area, I think you won't find Ramesh and me having very different views. I kind of agree with most of what he says. And, we have a shared example. We go back a few years where, Ramesh was in a different role wearing a different hat at the time. And, I was at Uber, and it was exactly the same thing where, regulators were like, are you a taxi or not? And we're like, why does that matter? Like, how does the answer to that change? Because they said, if you're a taxi, we'll have to ban you. If you're not a taxi service, we're going to allow you to operate. And then it became, so it's kind of like very reminiscent of that in some ways, because if you're a taxi, you have to have a physical meter. And we're like, but then the phone acts as the, in an Uber, if you sit in an Uber, the phone acts as the device that measures the distance and time, and it gives you the bill, so you don't need a physical meter. I said, that's fine, just install one, because that's the requirement. It doesn't need to be operational. And so I remember in Delhi, we actually installed like 100 physical meters in the first 100 cars to get a license, right? So there are, when you move from the analog world to the digital world, there are pressures of regulations that there are pressures that existing regulations cannot withstand, right? And so I don't know how that plays out. The way I would convince a regulator is by saying that this is by focusing on what Ramesh alluded to earlier, which was that this is an asset class, right? This is a new asset class, just like gold, just like commodities, just like equities. Define the, you can absolutely define a set of parameters around who can own it, how much they can own it, how long they can own it, when they can sell it, and how much is it taxed at. Just like every other asset class has those rules, right? And you can define a sector specific regulator if there is a need for that, whether that's the RBI or the SEBI or maybe a new regulator, right? But principally, that's demonstrating that they can do what they do to existing asset classes, I think will give them the comfort that they're dealing with a known entity here, not an unknown. It's right. And I think I would start there. Outside of that, like with progressive regulators who've seen the internet do what it has done, I think they do understand that there is no like, it depends on how you use this technology, right? Like you can get left behind, because India cannot ban Bitcoin. India can just ban itself from Bitcoin, right? It's a distributed network, distributed over several tens of countries these miners, probably soon to be over 100 countries. So it's just impossible to shut the network down without going and shutting down each one of those things. So you can ban yourself from the network rather than banning the network. In a world like that, then the question becomes, okay, can we use this to our advantage rather than our disadvantage? And I think the states around the world are grappling with this, and the ones that are progressive are realizing that they can actually, use this intelligently to attract capital from global capital pools. That is the single most effective and powerful use case. And in a post-COVID world where fiscal deficits are high, where there's monetary stimulus, central banks are grappling with how to get the economy back on track. I do think that uh, easing the barrier to attract capital into a country will be an important discussion in a year or two from today. And when that happens, I think crypto will play a major role in that discussion, even if it is not fully clear today. Because I think Polygon and Matic is just the beginning, and we'll see tens of these built by our young engineers.
Right. So Ramesh, just adding to what Akshay said, right? Considering that this is new and uncharted territory, have you seen some comparable examples internationally that can act as a bit of a precedent for India, given the 2 or 3 characteristics that are unique to us, right? I mean, the engineering talent that Akshay mentioned, we have like 30 million plus engineers here. We have a large enough domestic market, as we've seen for all of the internet products and services. And also we're a developing market, right? So there is this whole non-aligned thing that Akshay mentioned, non-US, non-China type of a thing. All of these are unique to us. So any precedents that you see elsewhere that we could apply for ourselves here?
If you look at precedents-wise, there are many countries which are actually going ahead and, in fact, regulating it. The word, therefore, is regulation. The word, therefore, is not banning. I would not say look at China. I would rather say look at countries which are comparable, which are democracies, and how are democracies of the world, large democracies, treating this kind of asset class. If you look at the US, in fact, I was just reading yesterday that President Joe Biden's budget has actually kind of listed out what are the disclosures required on crypto if you're owning or dealing in crypto. If you look at Germany 3 days back, has come out with how the banks have to deal with crypto and what are the mechanisms that have to be put in place and so on. If you look at Japan already has various ways to look at crypto. In fact, many of these countries actually treat them as property. They don't treat them as currencies. So obviously we have a precedence in other, more progressive nations, democratic countries, which are already following suit on treating them as properties, not necessarily treating them as currencies, ring fencing them and coming out with checks and balances, which is a great thing to have, considering that you also need to take care of the investor kind of protection here. You can't be having people conning. But at the same time, what is dependable, what is not, may soon get prescribed by various governments, looking at the model at which this market works. Apart from that, FATF, which is the Financial Action Task Force, has also come out with its own guidance notes on cryptocurrency and the likes. And Japan gave a statement saying they are looking at it and they're going to adopt it. So you are seeing slowly precedents from other countries where they are not only calling it property, but they are evolving. I'm not saying that any country is fully evolved, but they've not, from a stage of regulators who were equally in the same bucket like India, from looking at it with concern, now they're saying, okay, let's embrace it, but with checks and balance. And disclosure is becoming a soon kind of a requirement. For example, even the US authorities today now have mechanisms in place to collaborate with exchanges for looking at suspicious transactions, or for that matter, investigative kind of requirements. So there is a healthy collaboration which we are beginning to see between regulators, between exchanges, and between this whole community. And at the same time, we are also seeing, as far as an extended ecosystem is concerned, of the entire blockchain being adopted, embraced by different geographies, different countries, on how to go about progressively, even in as regards as governance is concerned. So therefore, if you look at it globally, we can't be saying, look, countries are not adopting it. There are enough countries, especially those countries that we are aligned more now as India geopolitically, are progressively looking at it, are embracing it, are putting checks and balance in place, are on a day-to-day basis coming out with measures to actually tighten the nuts and bolts, but from a positive standpoint, to say that this is how we will go about treating it. And India has a lot to kind of take comfort from these announcements and these directions that these countries are taking. And therefore, if you look at the recommendations that we as India Tech did, we went on a practicality mode. We said, okay, these are your concerns, let's address it. You have 10 things to ask or 15 issues. We address those 15 issues, which are pretty basic. I mean, we have not recommended anything which we would claim as rocket science, but these are pretty fundamental basic stuff that we recommended. And I'm actually seeing, I mean, it was pretty interesting. I was getting calls from different geographies where people are saying, so when we released the white paper, it got covered in a lot of journals abroad. And when country after country started giving recommendations that this is what we are going to announce on crypto, and this has been like, we released it somewhere on 5th of May, and we saw some announcement coming on 10th, 12th, 15th, 17th, and something yesterday, day before. People have been jokingly reaching out and saying, it looks like other countries are reading your white paper more and adopting it before India. So, I mean, but I mean, that was good to hear that the line of thought that we took is not something which is divergent. It is pretty much in line with the thought process that many evolved economies are looking at, regulators are looking at, and something that should be doable and possible in India. So if India is looking for a president, it has huge amount of comfort in a lot of geographies that it geopolitically aligns with, and democracies as well.
Right. So I would highly recommend that people do check out the white paper. I think it very succinctly outlines, what the government should look at this as, and what they should do. Ramesh, but for those of us, for those of who are listening who have not yet seen it, could you just broadly call out 2 or 3 aspects of the white paper itself? I think you spoke about traceability, taxation, so on and so forth.
Yeah.
Just briefly.
Yeah, so I'll briefly just summarize. We said 5 things, and it's important to know what those 5 are. The first basic thing, as I said, was to say, don't treat cryptocurrencies as currencies, call them as assets. 90% of the thought process and the perceptions around it go away with this. Next, we said for safeguarding, since these crypto assets will be traded in stock exchanges, we said maybe as a start, we should start registering Indian startups which have set up local homegrown exchanges, and say trading can happen for Indians in Indian homegrown exchanges only. This is the second bit. Obviously, the question then did come in saying, what is Indian homegrown? We said you should have at least 26% equity by an Indian founder, because if we have entrusted our cash in the hands of banks, which is equally at 26% local and 74% FDI, then a similar logic applies to this as well in terms of taking care of concerns. Then we said there should be sufficient clarity on taxation and disclosure. Very simple. There are 2 aspects to taxation: direct tax and indirect tax. In direct tax, we said that if you are holding the asset and you are somebody who is trading in it, it's profits and gains from business or profession. If you are someone who is not a trader, but people like you and me who are having our daily life and profession, obviously for us, it is like a capital gain. So it is short-term and long-term, depending on the nature of holding and the period of timeline of holding, as we have discussed for other equities and other stuff. And in terms of GST, we said GST should be applicable on the value of the platform fee or the exchange fee, and not on the whole amount that is getting traded. Obviously, I mean, we are pushing for that in the gaming sector as well with the GST Council as we speak. Then we said innovative uses of crypto for businesses and safeguards for retail investors should be there. And there is a list of things that we have recommended under that. Self-regulation also is something we have recommended, primarily because we realize that amongst the 15-20 odd recommendations that are there, not everything can be done by government. So a healthy combination of self-regulation and government regulation will work. The government has already set precedents in this regard in the OTT space, where they said you can do self-regulation and so on. And in terms of checks and balances, obviously we have given a range of checks and balances, but I mean, I can come to that later. But overall, we have even said that, like disclosures, you need to have accounting standards notified by the Institute of Cost Accountants and Chartered Accountants. You need to have a model where I can report suspicious transactions. Traceability is something we have already spoken about. Anti-money laundering is something we have spoken about. That should be part of it. And overall, we have also covered token issues in a way to say that, okay, under what circumstances you can allow tokens and what should be the basis for it, because that can become a potential area for leakage, we thought. And we have also said that like US has the Howey test and something like that. So something like that could be looked at. So overall, these are the broad set of recommendations which we have put out in detail, but pretty readable. It's not a 50-page white paper. It is just a 5-page white paper. So.
No, I would second that. I mean, it's a very, very eminently readable, I think very cogently written also, very well written. Thank you so much for that, again, Ramesh. So Akshay, on another note, there were some talks that the government is mulling the possibility of issuing like a sovereign digital currency itself, right? And we spoke about this earlier in the conversation, like a digital rupee. How will this be different from the Bitcoin or, Ethereum or, can you just compare and contrast, these differences for listeners?
Yeah, sure. So the way I understand money is, it's just, I mean, if you think about what money is, right? It's a number in an Excel spreadsheet against your name, right? At its most simplistic sense. And we all have maintain our money in different spreadsheets. So if you have a bank account with, let's say, ICICI Bank maintains an Excel spreadsheet. I'm simplifying it, but it's a database, right? It's a spreadsheet. It has your name on it and it has a number against your name. If you have some stocks, maybe Zerodha maintains a spreadsheet. It has your name, it has the name of the stock you have, and it has how many units of that stock you have, right? Bitcoin is also a spreadsheet where it's it's got an address. So it doesn't have your name, it has an address, right? And then it has how much Bitcoin is contained in that address. So it's just a spreadsheet of who has how much Bitcoin, and you can't have more than 21 million, right? So when you think of it like that, then the question becomes, okay, what are these? Now let's look at what digital central bank currencies are likely to be. They are basically currencies, or their money that will be maintained on a government owned spreadsheet. Right now, banks own the spreadsheet, right? So the unit of account will be the same. It will be the Indian rupee, except instead of the spreadsheet being maintained by your bank, it'll be maintained by the government, right? So you can think of all the benefits attached to that. All you need is a mobile phone and a wallet, right? Today, banking the unbanked is an additional step, right? People have more mobile phones than they do bank accounts. So why can't we just make their mobile phone their bank account? And guess what? Crypto is an easy way to do that, right? So they will, and the India stack is way ahead of the curve compared to all of the other countries in payments technology. It's relatively straightforward to add crypto to that stack. When I say to add Indian digital rupee to that stack. And in fact, the India stack team has come out and said we can actually add even global crypto assets to the stack, because they're complementary. Because we will use the Indian digital rupee for domestic transactions, and the global crypto assets as global assets that Indians hold, right? So what can you do when you get these CBDCs, central bank digital currencies? Well, if there is a slump in the manufacturing sector, right, you can provide a direct stimulus into the wallets of those people in the manufacturing sector, right? You can give them a loan at a subsidized rate instantaneously, right? Because you are controlling the, like when you control the database, you can add digits to someone else's bank to wallet, right? You can sort the Excel spreadsheet by industry, and everybody, let's say the consumer electronics industry is suffering, you can provide you can put money in every Indian consumer who earns below a certain amount. You can put money into their wallet and say you have to spend this within the next 30 days only on consumer electronics, otherwise the money expires, right? So what it allows states to do is give full effect to their monetary and fiscal policy. And typically, giving full effect to your policy meant relying on banks, which you won't have to do anymore. Now, the banks might still exist because they're the wallet providers and they do customer service and all of that, but foundationally, that's the idea. Now, there's there are fears around, like, okay, that's states having more control over this, right? And that's fine. That's a reasonable, I guess, that's a reasonable criticism. Again, I think that this is where technology is going, right? This is where things this is going to happen whether we like it or not. And we should assume that actors are in good faith. All the actors are acting in good faith until proven otherwise, right? And we have a democratic court system, a parliamentary system, and so they're just not going, like, they're not going to take unilateral action that has not already, that cannot be constitutionally sustained, right? So that those protections still exist. But yes, I think that's what the function of state CBDCs will be, and they'll be complemented by global crypto assets. So if I were to summarize in like a couple of sentences what the future may look like, you may have an India Stack wallet on your phone. You'll have some digital Indian rupees, and then you'll have some Bitcoin. You'll have some Ethereum. Maybe you'll have an NFT that represents a fraction of an apartment in Chile. Okay, on chain. Maybe you have a few tokens that are of a social media influencer who's in the US. Maybe you have like a few tokens that are actually issued by a startup in Denmark, right? And so global capital movement becomes borderless and seamless, and capital is attracted to where it's most treated, where it's treated best. And maybe you have a few tokens issued by Indian startup founders, right? And so it's just like your YouTube feed today. You don't know which country. I mean, you're not, the first instinct is not to look for which country the video is from. You just like a bunch of things, right? And the algorithm naturally populates it with the types of videos that you're likely to like, and they may be shot in whichever country, right? And on the internet, those borders will get erased. And that's why, as I said, I couldn't think of, like, look at all the Indians who had to move from India to the US because there was no easy way for capital to flow from the US to India. Why did Satya Nadella have to move out? Why did Sundar Pichai have to move out, right? Because there weren't as many opportunities. Okay, well, if we can make information movement and capital movement absolutely frictionless and instantaneous and cheap, do you really need that H-1B visa, right? So maybe, so in some ways, crypto is the new H-1B visa.
Okay, that's a good soundbite. So, again, Ramesh, we're seeing that the possibilities are immense, right? And the possibilities are beyond Bitcoin itself. I mean, so let's look at blockchain and that technology itself, right? There's this whole Ethereum and smart contracts world, which is a whole, world unto itself, right? And given that, policies and laws in India are so difficult to enforce at the last mile, right? I mean, we're famously short of capacity on all of that. Do you think that there is a use case to use these smart contracts, maybe for land records or some small thing there, just to reduce the burden on the executive or judiciary and in India?
Absolutely, there are huge amount of kind of multiple use cases that we have as regards this technologies are concerned, and embracing more and more such technologies in the blockchain world is concerned, right from financing to taxation to even agriculture, insurance, and you have, of course, as you mentioned, smart contracts executed based on what you call matching of terms and validation by other parties and so on. So I mean, the use cases are plenty. The potential, therefore, for India to grab this particular option is that on one side we are seeing cryptocurrency as one bit of it. On the other side, we have so many underlying use cases which are emerging across sectors, and there are many more to discover. I mean, we're just talking on the, I would say, on the surface. We're just scratching the surface, but when we dig deep, more and more such use cases will emerge sector by sector, even inside the government, outside the government, for social sector, for MSMEs, for what you call agriculture, and so on. And therefore, which is why I'm strongly of the view that this is something we need to touch for two reasons. One is, of course, that these multiple use cases, we are good at, there's a wrong term here, but I'll still need to use it. We are good at jugaad, and jugaad is in a form of innovation. I mean, it is nothing wrong in fixing few things and coming out with something, but that's how use cases come for different parts, right? I mean, a jugaad is a use case created for multiple spare parts which were otherwise intentioned for something else. But I mean, the every technology, every spare part, every kind of use case is built on the premise of what the first person thought about it. But there are multiple people who may find alternative uses to it. There's a huge potential there. And imagine if we are able to leverage that, and we are able to create more and more use cases out of actual on-ground problems in India. and trying a way to solve them and make them more transparent and open, we achieve two things. One is we create a use case for the world on different areas, use case for different types of worlds. I mean, the developed, the developing, and the underdeveloped. I mean, we have all those available in our country. And therefore, we are a classic kind of a country for use cases for all types of countries around the world. And at the same time, you also are developing the manpower which is getting kind of trained or innovating on these technologies, which creates a use case for becoming, in a way, I mean, back office is, again, for lack of a better word, a term being used here, but I mean, certainly you become the global back office for blockchain and crypto. Because not only have you created use cases, but you've had manpower which is now trained in creating future technologies and therefore lending technical expertise to the world. That's the second use case. And the third use case is the surround kind of thing. For example, I mean, every time, I'm going back to my examples of whenever we need to do something today, even in the startup world, you have like, okay, let's create an overseas entity. Let's put it there. Let's go and list somewhere. Let's go and get these technologies from other parts of the world. It is good to hear from a collaborative standpoint, but the fact that those are sitting in different parts of the world is because somebody developed that and grew there. We need to be that. I mean, ideally, we should aspire to be that. And that can come by multiple use cases, that can come by creating a healthy ecosystem of trained manpower, innovative manpower, and the support that goes around it. For example, I mean, if you want to do something in fintech space abroad or something like that, they would say, okay, you need a smart lawyer who understands this topic. That guy is sitting in Singapore or that guy is sitting in US. Why can't those guys be sitting there in India? If the market evolves so much in India that we have the best crypto journalists, we may have the best crypto lawyers, we may have the best crypto accountants, I mean, who know this market, who know what to advise, who are well versed in working in the system and therefore become advisors to the world and the market in India. So there is a large, big ecosystem of developers, of project managers, of people who can innovate and create technologies, of people who can come out with solutions, of people who can support from an administrative standpoint that includes a legal framework, that includes an accounting framework, that includes what you call a coverage framework. I mean, the potential is immense. And therefore, I would be, I mean, I'm looking at it from that perspective that, I mean, if we talk about, if the government is looking at livelihood, if government is looking at bringing the economy to the next scale, I mean, these are the things that the government should engage in more from an enabling standpoint. We should stop shying away from being the fact of being conservative on it. I think these are stuff, I mean, that of course doesn't take away the fact that we don't need checks and balance. We obviously need, because at the end of the day, every technology has elements of misuse. Obviously, the more you reduce the potential for misuse, the more you leverage its use cases.
Okay, so slightly different argument here would be that, let this run on Jugaad then, right? Because maybe the possibilities are too immense for us to, even grasp, and right, you won't be able to fit this in a framework. So if you look at for example, IT in the 90s, right, where government just sat on it and just completely ignored it. And arguably, I mean, that is why it kind of grew, right, in India. Is there a need for the government to be proactive on this front and do something about it? Or, I mean, they could probably turn a blind eye and let Indians discover for themselves the true value and potential of this technology?
Yeah, on Jugaad, I have two comments. One is, of course, that I say, okay, guys, dabble and figure it out and figure out the use cases, and that's a Jugaad. But if I say, I'm banning it, but still you guys use it as a Jugaad through gray market is certainly not the Jugaad I'm trying to look at. So therefore, which is why I'm pushing for enabling regulation. And if you look at the IT boom that we had, it had two elements to it. One is, of course, that there was this hunger amongst particular states and people who were, as Akshay mentioned, were hungry to go to the place where they can get in the land of opportunity, which will kind of enable this. So a lot of people dabbled in IT, a lot of people dabbled in tech. Slowly, we've started becoming the back office. But then in course of time, I mean, the government had to open it up. I mean, you had the 100% FDI in IT space, which was opened up. But more importantly, we also had those great tax holidays and 100% EOUs, SEZs, STPIs, schemes that came out, which allowed wealth creation. And therefore, these companies were able to reinvest and grow further. I mean, today we have those 3 or 4 large names which dominate the world space whenever you talk of development or back office and so on, is because that kind of wealth creation was enabled with enabling tax breaks and encouraging atmosphere, which included all those schemes. All I'm saying is that you need to have enabling policies which will either enable those kind of things and enable wealth creation. Wealth creation shouldn't be a bad word, first of all. Promoters should not be looked as crooks. I mean, that's a fundamental ethical housekeeping that we have to do. I'm not saying something new. Even the Prime Minister on the floor of the House said that we need to look at businesses differently. Making private sector has been the backbone for a lot of things. In fact, what I see is that most of the policies that were either written in the past or the hangover that we are still continuing on were written with the intent of checks and balance, but checks and balances, as I mentioned, to the extent that I applied too many brakes that the accelerator went missing. So it can't be that way. I mean, I would actually suggest 3 or 4 accelerators with one large brake to stop it, rather than 3 or 4 brakes with one small accelerator, which is again not in a working condition. So if you want to push the economy now, if you want to be wealth creation, wealth creation is fundamental. I'm stressing on this topic again and again because we are stressing for this topic even in the startup world. We're stressing on this topic even in the crypto world, because unless India creates wealth within India, you will not have the capital to reinvest to such an extent that you can grow and create those big names. We can't be talking back to the same example of the crabs in a crate in a ship, where each one is trying to pull other down. And you also have government regulations equally pulling you down. So we can't be living in that kind of a scenario. It has to be an enabling provision. It has to be encouraging. Plus, more importantly, we should embrace new technologies that has the potential to create wealth in the country.
Yeah. No, I think that's certainly a very profound point as well, right? I mean, we have to shed that legacy of sub businessman chore to assume that as default and then do our policy and compliance and laws and whatnot. So Akshay, let's shift our gaze a little bit and look at financial institutions. We spoke about this briefly in your previous comment, right? Do they have any reason to worry about all of this innovation, that it will somehow make them redundant? If I look at it, right, I mean, people said fintech will make our banks redundant, and that technology companies will take over and become banks as such, right? But that hasn't really happened in India, I would say, right? So banks have become a lot more tech savvy over the last 10 years. But then there is this talk of DeFi, or decentralized finance. And it seems like the next logical evolution or leap in fintech, right? So how will this thing change things, and what should banks and financial institutions do, in your opinion?
I think if you look at what's happened with fintechs are an incredibly well executed front end to finance, right? The back end continues to be the existing infrastructure of the banking industry, right? Because a fintech is effectively marketing legacy banking instruments such as mutual funds or loans or whatever on the back end from banks, right? There are few fintech companies actually that have their own loan books. They typically have banking partners through which they offer a loan to their consumers. Now, the reason that DeFi makes a difference is because it kind of changes that. It complements that back end in a very profound way, because instead of going to let's say I'm an MSME operation in India, okay, and instead of going to my regional bank and paying 25% interest, a big bank is not lending me. So there's like a small regional bank, right? Because I'm an MSME, a big bank is like, you don't have the necessary cash flows that are predictable enough for us to lend. So they're like, okay, let's go to a really small regional bank, or let's go to a money lender or whatever, right? There's a massive offline money lending industry, right, that has not been disrupted by banks because banks don't compete with them, right? For that long tail, DeFi is an incredibly good replacement, because instead of going and borrowing at a 23% interest rate, or from a loan shark, or from a regional small bank that doesn't have the ability to lend out, I could just go borrow from a global permissionless pool of capital that's offering a certain interest rate that will always likely be lower, right? What is DeFi? I mean, okay, just for viewers who may not have heard of it, it's decentralized finance. It's building all the Wall Street stuff on the blockchain, right? So the next Wall Street is not on Wall Street. It's actually on the internet. And the idea is all the banking functions like lending, borrowing, investing, can be created on the blockchain, right? And so will will banks that kept up with the technological evolution keep up with this? Will they have problems with this? I don't think so. Like they can do stuff like custody, right? They can build their own wallets. They can do institutional custody. There's just a lot of ways for them to get involved. That's already happening in the US. Right? They can hold stablecoin deposits for you. They can give you a choice between transferring your money on the regular NEFT system or a Ethereum-based settlement layer, right? There's just a multitude of ways for them to just get. It's just an additional offering as far as bankings are concerned. Should the offline, unorganized lending market be worried? I think so, because that's going to probably get disrupted by DeFi, and that's probably a good thing, right? Like this whole loan mafia culture that exists not just in India but pretty much around the world will get normalized, right? And that's why it's kind of like for me personally, it's been it's very stark to see the similarities between Uber and crypto, just because taxi was unorganized. It was kind of like a mafia like operation in a lot of cities. It was heavily licensed. You could have only a certain number of cars in a city. I don't know if you know this, but in they're about I think I think they're the same number of medallions today, taxi medallions today in New York City as there were in 1920, right? So that's pretty insane, right? And so it reminds me in some ways of that. And like we had the same heavily regulated banking industry and heavily regulated this banking infrastructure that has prevented actually from a lot of MSMEs and people who are unbanked from actually accessing those banks. It hasn't really helped that sector, right? And one of the biggest problems that the RBI also in its report notes is that there is a massive credit gap for the MSME sector in India. And if you want to close that credit gap, you just have to be open to inviting global capital pools that are willing to take that risk for you, right? Because if you prohibit global capital from taking that risk, then local loan sharks will take that risk at an extremely prohibitive interest rate and probably very unfavorable terms for the MSMEs borrowing. So I think that's really where DeFi will play an incredibly important role as I see it.
Right. Yeah, credit access is something certainly that we should solve for and innovate for sure. So Ramesh, finally, what do you see as a road ahead for us? How can we improve the understanding and adoption of crypto? And maybe since you also work a lot with startups, we've spoken about how things could be very favorable for startups in terms of attracting global capital, or not having to dance around all this compliance and setting up multiple entities, and also even using our talent to build for the world, right? Build products and services for the world. So just your final thoughts on how do you see the road ahead and what are you optimistic for?
Yeah, I mean, as India Tech, one of our primary goals is, of course, the fact that we should have the same environment that a counterpart in any other part of the world. If I set up a startup in some other enabling geography versus if I set it up in India, what are the roofs and walls that exist and how do I break those roofs and walls? Primarily with the intent that I'm able to grow, sustain, survive, thrive, and make it big. And make a marked difference to wealth creation in the country. Plus, of course, the larger interest of whatever you are aspiring for, reaching out to that target audience that you want to send it to. So it has to be obviously a collaborative effort. I mean, industry, government and regulators need to talk often. Industry needs to be articulated in a language. And this is something I strongly believe in. When we represent the industry, or even when the industry represents itself, because you are so passionate about the topic that you are representing, sometimes you may carry the bias that maybe, I mean, this is what it is. Why is this man not getting it? Without realizing that that's because you are passionately researching and working on this sector so much that you can't be expecting the whole world to be on the same plane as you. And therefore, momentarily, if you step out of that soul of yours, which is very passionate, to be someone who doesn't understand it and look at it, maybe you will say that, okay, maybe I was biased in some of the things that I was asking. Maybe I was unreasonable in some of the things I was asking, or maybe I was totally talking a different language, which was not something that was relevant to that person. Because I mean, if I keep talking technology and future to someone who is a gatekeeper, obviously, I mean, that is not something that will fly. So my take is that it has to be a collaborative effort where regulators, governments, industry have to sit and talk often and collaborate often to ensure that enabling regulations come in to ensure that what founders are driving passionately, whether it is in the startup space or in the space that we are discussing today around cryptocurrency, blockchain, and so on, get enabled to such an extent that those roofs and walls go away and we are able to kind of take our journey forward, similar to our counterparts who exist in other parts of the world who have that luxury.
All right. Akshay, we're going to end the podcast with some final thoughts from you. With everything that's been discussed here, how do you see people participating in crypto? Should they see it as an asset that they should invest in, or a currency that they can trade, or some technology that they should adopt and perhaps build on? What should they do, and where can they seek more information?
Yeah, I mean, and the best way to think about crypto is it's the next iteration of the internet that allows you to do more with the internet than you were previously able to do. If you're able to send information on the internet without any friction, now you'll be able to send value on the internet without any friction. If you're able to stream content, you can stream money now, right? As an example, maybe somebody tuned into just 20 minutes of this podcast, and let's say this podcast had a paid subscription. Well, for every second they're tuned in, they're probably paying half a cent, right? So it's kind of like really small transactions, really large transactions. It's kind of the transaction that the existing that we haven't even contemplated today, right? I think the metabolism of transactions will increase, and that's an opportunity to both attract capital and spend your capital and invest your capital in ways that you didn't think were possible. So I think people should just be open to that, regardless of what industry they're in. This is going to impact them in a profound way, and it is going to create a lot of value. And the sooner people learn about it, the better. And here's why. It's because you're able to now transfer value back and forth easily. It's incredibly easy now and frictionless to convert knowledge into wealth. If you think of it as a product funnel, previously you had the knowledge, then you had skills, and then you had to acquire capital, and I mean you made a salary, and then you acquired wealth, right? Now that funnel, there's a lot of friction. Maybe in India there's not many opportunities. You have to move to Delhi or Bombay or Bangalore to work there. A lot of people from maybe have to move to the US to work there. So to convert knowledge into wealth had a lot of friction. Today with crypto, that friction has been dramatically reduced. If you acquire knowledge, those ideas in your head can be the most powerful wealth generator, because you can put them up on the internet and acquire or invite global capital frictionlessly, right? So knowledge is power. I would amend that to say knowledge is wealth in the age that we're going to enter. As an example, if you just read about why Bitcoin is important in the context of global macro and how there's a large super debt cycle that the US is going through, and that's why it's a macro asset that's important. Had you read this in 2013 and bought some, you'd be up, you'd have probably turned $100 into, say, whatever, $1 million, right? So that knowledge, the ability to convert knowledge into wealth, is what crypto is. It's a machine that does that. And so I would encourage people to participate in that, get to know that. If you're looking to do a free course that I may suggest, Preeti Kasi Reddy, if you just Google her name on her website, has a free crypto course for anybody just looking to learn about crypto, regardless of what industry you're in. And I think once you get the basics, it's kind of like learn your own adventure. Like I have a friend Kunal, who we may know, Kunal Kapoor from who's a Bollywood actor, also an entrepreneur who loves the NFT space. He's gone down an NFT rabbit hole. I know someone else who's like building a really niche DeFi borrow lending protocol that does not use oracles, and that's like a new innovation. And so they've gone down that rabbit hole. So it's kind of like make your own adventure, right? Much like media is. Like my YouTube feed is not the same as your YouTube feed, but at least we should learn how to use YouTube. And so I would suggest that Tanmay Bhatt and I have started a crypto channel. I don't know if I can plug that, but you guys
go right
should
ahead.
check that out. It's called Super Pumped. It's on YouTube. It's a casual show where we bring on people that we learn from. I used to be a comedian in a very distant past world. And so it's been great reconnecting with Tanmay on this and just starting a show that's a little bit more casual, get people introduced, where we bring on smart people who work in the industry, who are researchers, and interview them in a way that people may enjoy consuming. So take a look at that. And then if you like reading, then I would, and you're really interested in some, like investing in this, I would encourage you to check out Messari, which is a paid research subscription. And that's a little bit more advanced. But I would suggest just get in there and try and learn as much as you can. And then it's your own, you can kind of chart your own journey.
Yeah, definitely. So thank you so much, Ramesh and Akshay. This was super helpful, very fascinating conversation, and certainly one that I will be reflecting upon many times over. And hopefully, all of this will send our listeners down the rabbit hole, and they will discover more about crypto and participate in it. Thank you again for joining us, everyone. Until next time, do stay safe and take care. Jai Hind. Thank you.
Thank you.
Thank you for tuning in to this episode of the Bharatvaarta podcast. If you want to see more content like this, then don't forget to subscribe to our channel. We started Bharatvaarta to facilitate long-form discussions on politics, policy, and culture. We don't necessarily endorse anything that was said in this episode. If you wish to offer us feedback, do reach out to us on social media. We are at Bharatvaarta on Facebook, Twitter, and Instagram. You could also get in touch with us on our website, www.bharatvaarta.in. The links are in the description below. Until next time, stay safe, take care, and Jai Hind.